Okay, I want to welcome everyone and thank you for joining us on our latest edition of our SIRA webinar series, The Challenge of Having Clubs in Adult Communities. Managing clubs certainly has its challenges, and hopefully after today you'll have a few takeaways and you'll learn a few things that you'll be able to take back to your community, to your club leaders and your fellow board members that'll help you tackle some of these challenges. My name is Joe Chorba. I'm a manager here at Wilkin & Guttenplan, and I'll be your moderator for the program today. And we have two really great speakers, two people who I've had the pleasure of working with and learning from for almost 15 years. First up, we'll have Mohammed Saliani. Mohammed is a principal in the audit department and joined the firm in 2001. He specializes in providing audit, review, and compilation services for nonprofit organizations, closely held businesses, and real estate entities such as community associations. Mohammed is also active in the industry and is currently a board member for the New Jersey chapter of CAI. Mohammed is also a frequent speaker providing education to board members and other industry professionals. So thank you for joining us, Mohammed. Next up, we'll have Carol Kransky. Carol joined the firm in 1993, and she too is also a current principal in the audit department. Carol specializes in servicing the real estate industry, closely held businesses, where she provides audit, compilation, review, and miscellaneous consulting services. Her client base in the real estate industry includes community associations and co-ops, and Carol is also active in the industry and is currently a member of the Legislative Action Committee at CAI, so thank you to Carol for joining us. Just a couple notes before we get to some of the material. The webinar is being recorded and will be available on our website to be viewed at a later date. So if you miss any, if you have to step away, don't worry, it will be up and available sometime after this recording, maybe tomorrow or in the next few days. And I think that's it. Let's take it away, Carol.
Okay, thanks, Joe. All right, clubs. It's a big topic among board members, community association professionals, whether it be insurance agents, attorneys, or even us, your auditors. So there's two schools of thought in how to manage these association clubs. The first school of thought is, all right, leave these clubs alone. The agents of the association should just stick with managing the property. They should be board members. They should just do what they're supposed to do, which takes up enough of their time, and let the clubs manage on their own. There's the perceived risk is from clubs misbehaving or doing something that they should not be doing are really minimal. Association already insures the property. There's already enforcement mechanisms in place. So basically, just let the clubs do their own thing. Don't become a gatekeeper and a guardian of the clubs. That's not your expertise, and you certainly don't have the time to do it. Okay, that's one school of thought. Just let them be. The other school of thought, 180 degrees differently, is to watch over these clubs. Watch their every move. Many professionals, attorneys, accountants, insurance agents, they're risk averse. And they're fearful of any type of significant liability to the association due to one of the clubs that negligently manages the funds of a resident, gathers at the clubhouse for a reckless purpose, or fails to abide by federal, state, and local tax or liquor laws. The thinking is that, when clubs use the association's name, use association resources, host events on the association's property, the association ultimately would ultimately be responsible if something bad were to occur, if there was any type of damages or any type of legal liability. So being risk averse, the association board members may take the position that we want to watch over you, we want to govern you, and we want to make sure that there is very limited liability to the association. This is something clearly that there's no right answer. It's going to be debated by many professionals. And really, the practical solution is probably a little bit in between. And Mohammed's going to start to talk about those things.
Okay, thanks, Carol. So the first question here is, what really constitutes a club? Is it that group of people who meet on a regular basis in the clubhouse to play backgammon? Does that constitute a club? That is not a question that we're really here to answer. That is a question, if needed to be answered, needs to be asked of your attorney. You need to look at or speak to your insurance advisor, or maybe look at your governing documents if they mention what clubs are as far as your association is concerned. We're more going to talk about the financial and tax aspects of dealing with clubs, and we'll talk about clubs that do have financial activity and how to deal with them. So basically there'll be two types of clubs. One is the clubs that are board sanctioned and usually under the activities fund. These are clubs that really don't want to bother with going out and doing everything on their own. They'll usually have a bank account, but they will use the association's tax ID number to open up that bank account. Those clubs, their activities tend to be more coordinated by the activities director if needed. They provide regular financial information to the board because that needs to be included within the association's financial records. In fact, in some certain cases, these clubs actually have their checks signed by the treasurer, so the board is aware of every move that's made by those clubs. And generally, even if that's not the case, the board knows what that club is doing, what they're up to, what their purpose is. So those are boards that fall under the umbrella of the association. Then you have the clubs that want to be totally independent. They're not really interested in having accounts using the tax ID number of the association, or they might actually be a chapter of a more global or national group that's operating within the association. So they'll have their own tax ID number or have another tax ID number that they use. Generally, the board is not following the day-to-day activity of that club, and you may have some people who belong to that club, but the board generally is not controlling the club itself. So if you have clubs like that, it's important that you have certain documentation relating to those clubs within a so-called club file. So what makes up the information that's needed within the club file? First of all, you need copies of documentation with the club's legal name, current bylaws, and current membership list. So you need to know what's the club's purpose, why is it being formed, who are its members, who's running the show, who's on their committee. You have to have that information in case you need to reach out to them and speak to them. Then you need to have a certificate of insurance evidencing a general liability that names the association as an additional insured. Carol's going to talk about insurance later on, but this is extremely important, especially if the club is using the association's facilities, of course. Then if they have any kind of licenses or permits, you have to have those on file. If they have a gaming license, they have an alcohol license, if they're serving alcohol, you need to have anything that they have, any permits that they have, you have to have them on file in case something happens and you need to retrieve that license or that permit on a later date. Also within that club file, you should have an annual list of proposed activities that requires the use of the association's properties. After all, you don't want the club to set up some kind of activity on the same day that you're having your spring party or your annual summer outing or something like that, and they're booking the same spot. So you want to make sure that you have their activities, you have the dates that they want to use the club facilities marked out, and the activities director knows what's going on. Otherwise, it might just become an issue with having too many things happening in the same place. Also, you need to have an annual certification by the club that acknowledges compliance with all legal and tax requirements. If you have an independent club, they need to be aware of all legal and tax issues with running a club within the association, and they need to sign off saying that yes, they are aware of all these issues, and yes, they are following the law. In case they're not, then you can say that they did inform you that they would be following the laws, and all tax requirements.
Mohammed, I have a question for you along the lines of a club file and reporting to the board. One of the things that I get asked occasionally is what other type of reporting should the individual clubs be providing to the boards, things like receipts and disbursements. What are some of the other things that they should be providing, and how often do you recommend they provide it? Should it be monthly, quarterly, annually? Do you have any thoughts on the regular activity and how that should be reported?
Yeah, so if you have a club that's using the tax ID number of the association, that means that whatever financial activity they have comes under the umbrella of the association and gets included within the association's financial documents and has to be audited. So it's very important that they provide the bank statements, bank reconciliations if need be, all the receipts that they gain, that they have, all the expenses that they are incurring. Usually we recommend that these clubs use some kind of accounting package, be it Quicken or QuickBooks or something similar, that they can record everything in and just provide that on a regular basis. As to how often, I think the best practice probably is monthly, because then that can be included within the monthly activity of the association's records, and then the board can see it within their monthly reports. If not, then I definitely recommend at least quarterly. They should be received and put into the association's financial records so the board can see what's going on within that club, how much there is, what kind of money they have, and what they're doing with it.
Great. Okay, next I think Carol is going to talk a little bit about insurance and those challenges and considerations.
Right, so one of the big considerations, and really this is regardless of how the club is, whether the club is, independent or just, reports to the association, insurance consideration is a huge issue. And really, clubs may not be covered by their insurance policies, the association insurance policies, for lawsuits that arise out of bodily injury or property damage. The association's policy covers the named insured, and the named insured is usually the entity. It covers the entities and activities owned, controlled, and managed by the named insured. So, it would be only those things that are covered specifically that the association owns, controls, manages. And even though a list of clubs may be provided to the association insurer, coverage may only be extended to those club members that are acting on behalf of and at the direction of the named insured or the association. So additionally, insurance companies often require knowledge of the insured's activities, and often policies include exclusions, limitations, and conditions. So certainly for private clubs that are existing independent from the association, under most policies, neither the club nor the association would be protected for the club's activities. So the association's concern is that where there is a lawsuit, the association as owner and facilitator of the property may be named in the suit. Additionally, as clubs develop and grow in membership, they frequently schedule trips or host outings off-site. Associations' insurance coverage may not extend to these activities that are held off the property. And also, some clubs venture into activities that include hiring, performers or workers who also may not be covered under the association's workers' comp policy. So, it's very important that for club activities, especially those held off, that somebody speaks to the association's insurance broker and make, their insurance professional, and make sure that they are covered. If they're an independent club, they need to make sure that they've also spoken to an insurance professional and they have the appropriate insurance. So regardless of whether you're board sanctioned or you're independent, or you need to make sure that you have the appropriate coverage, and make sure that it covers you off-site or anybody else that comes to your events. So again, this is something, we always advise clients speak directly to the insurance professionals. They're the ones that can really give you the best guidance. The next area to consider is alcohol. So often clubs want to serve alcohol at the clubhouse or serve alcohol at their events. The Division of Alcoholic Beverage Control, or ABC, in New Jersey, they establish and enforce compliance with alcoholic beverage control laws and regulations. And the laws and regulations are very specific. Clubs that elect to serve alcoholic beverages at their events must elect one of the following options. Number one, they could include alcoholic beverages at a line item in their club's budget and not charge for any alcohol at the event. In other words, the club paid for the alcohol, they bring the alcohol, and it's just available. Two, the club members supply their own beer and wine. So just club members come and bring the beer and wine to the event. Three, they hire a caterer with a liquor license that may be utilized at the association premise. Or the last option would be you obtain a special events or club license. So if you're selling alcohol, then you need to make sure that you have the appropriate license. If these steps are not followed, alcohol may not be served on the premises. Independent clubs, as well as the association, should always speak to an attorney, or you can speak directly with the ABC prior to hosting an event involving liquor. If you don't follow these rules and there is some type of liability that arises, then the association could really hold some liability. So it's really important to follow these. Again, this is something that I would recommend you speak to your attorney or speak directly to some representative of ABC to make sure that you're doing everything appropriate.
All right, so now we're going to talk about some financial reporting and control matters that you need to consider if you have clubs within the association. So the first thing is that if the name of the club has the name of the association, it may be perceived that it is being managed by the association. So for example, you can have XYZ associations, Italians Men's Club or something like that. I've seen that, that's pretty common. And so if you have that, then the perception is that, of course, the association's running that club because it's named in there, and it may not be the case. And if there's something that happens, not necessarily not that club, but just if anything happens, then your association members can come back to the association and say, well, it's your name there, you were doing something, you were involved in it, or you were running it. Then clubs' funds may be misplaced, misappropriated, or not accounted for because there's no proper accounting controls in place. As I said earlier, any club that has money that it's dealing with, it's always better to have some kind of accounting program that you're using, and you're putting in all the receipts and all the expenses, and you're reconciling the bank statement on a regular basis to show that there's proper accounting controls in place. And everything's not being done by one person, and it's actually there is somebody else looking at what's going in and what's going out. And then funds being used for political contributions. So there's two things here. One is that you have to make sure that they're operating within the confines of the tax laws as far as political contributions are concerned. Secondly, you could have a situation where the club is giving money to a political party that not everybody is affiliated with. So that may cause issues within the association if they find out that you're giving it to XYZ party and not everybody agrees with what that party stands for. So, and club's financials are not published either by the club or the association where it operates. So even if you have financial records, they need to be made available if you're using the association's tax ID number, because those are financial records of the association itself. And people who belong to the association need to know what the money is being used for. So it's very important that these financial records are published and are included within the association's financial records. Then we'll talk about, taxable income is earned but is not reported. Carol's going to talk about taxes a little later on, but that is definitely a consideration that you need to be aware of. 1099 forms are not issued. So what happens is that if the association has a vendor for example, the concierge service or the security guards, excuse me, and the association or the club decides to give money to that guard. Now, because the club's activity is under the association's umbrella, all money given to that particular person, be it from the club or from the association directly, in total, in aggregate, per calendar year, if it exceeds $600, then a 1099 needs to be issued to that person. So if you have people and they're not on your payroll and you're paying them money, you have to make sure that you know how much is being paid to them, and if it's over 600, then a 1099 is being issued. Funds are used for unauthorized or illegal purposes. We've seen situations where directors of the club use funds for their personal expenses, and because proper financial records are not being kept, or one person is in charge of everything, it's not recorded properly, and funds are being misappropriated. So these are, then moving on, also, yep.
Well, I just have a couple quick questions. One is, it's a common question, but it has to do with the 1099s, and we get this question a lot. What if you have two different clubs that are using the same vendor, or even the association is using the same vendor? Each of them pay less than $600 minimum to report a 1099, but in total, the total payments to that vendor over a calendar year is greater than $600. Just to clarify.
So if that club is using the association's tax ID number, then it's under the tax ID number. Then it's under the umbrella of the association. So you have to look at it in aggregate. If it's over 600 for all the clubs and the association put together, then a 1099 has to be issued.
Okay, and then I have one other question. You talked about being transparent and being clear on what the money is being used for. And this question is for either Carol or Mohammed. Just your thoughts on it. Contributions to charities. So I've had the question from some clubs that said, we had a few dollars left over at the end of the year, and we wanted to make a contribution to the local police department or local fire department, or some have even had events that were the purpose was to raise some money for a specific charity. So I don't know if either of you can just kind of comment on that, what your thoughts are as far as contributing to a charity, and what some of the concerns can be.
I think just in terms of contributing to a charity, I think that a club needs to be very careful that the charity they're contributing to, the members of that club would all agree and want to give the funds to that charity. So, you might have, a bridge club, and then there's money left over at the end, and some people say, okay, well, we want to give it to the Republican National Committee, and maybe the people that are, Democrats are not going to be happy with that. So, you need to really be careful if you're going to give contributions that it's in line with the club's purpose, and that the members of the club would be happy with it. Now, in terms of raising money and giving large contributions, unit owners that paid dues to the club, and then the club then gives a contribution, those unit owners can't take any type of charitable contribution on their tax return for any payments made to the club for those types of donations, because you can only take a deduction if the contribution was made to a qualified 501c3 organization, which a club would not be.
Okay, great.
Okay.
All right. So moving on, still talking about some of the considerations. I think this kind of covers what you were talking about. Funds are spent for purposes unrelated to the club's activities. So, for example, if you have a club whose purpose is for a certain charitable cause, but then the money is being used for administrative costs, meetings and lunches and things like that, then the money is not being used for the purpose of the club, and members may not be happy with the way the money is being used. Also, if you have a club that has generated a surplus, and sometimes I've seen this where the club says, okay, we'll buy certain furniture for the association, so it helps everybody, but again, that money that's being spent is not being used for its initial proper intent. So you need to make sure that the money is that whoever is contributing to that club, wherever that money is coming from, the people know that the money is being used maybe not for the intent or the purpose that the club is there for. Also, club leaders or certain members may receive undisclosed privileges such as free trips or commissions. This is quite common. You have, for example, you have a club that says, okay, you're going to, if you buy 10 tickets to go and see a show and the tickets cost $50, then we're going to give you 2 tickets free. So Mr. and Mrs. President of the club go and see the show free, and the rest of the people pay $50 to go and see the show, and nobody's none the wiser because nobody knows what's going on. That cannot be. If you're getting 12 tickets for the price of $500, the cost of $500 needs to be divided by those 12 tickets, and everybody needs to pay an equal share. It cannot be just because I'm running the club, therefore I get special privileges. Or if I'm getting a commission from going to see a certain show, then I don't give that to other people, or the credit is not given to everybody who's attending the show. So that needs to be made aware of if that is happening. No documentation is maintained supporting the financial activity. Again, I can't stress how important this is, that if you have financial activity, there has to be proper documentation, there has to be proper accounting being done for the financial activity, and it needs to be done by one person and looked over by somebody else, so that it's not just one person running the show and having control over everything. Right? Okay,
so on to income tax considerations. I'm going to talk about income tax and sales tax. I'm just going to give you a little bit of an overview. There are a lot of specific circumstances that will affect what's taxable, what's not taxable. Clearly for certain specific situations, please call your book and gut plan advisor and we can help you through this. So clubs and organizations may be subject to tax on income such as dues and outside fundraising amounts. If a club operates as an independent entity, then it could apply for a tax exemption from the IRS if it meets certain requirements to qualify as a social club. That would be as a 501c4 club. And clubs can apply for this tax-exempt status using IRS Form 1024. Without this approval, the club or organization is at risk that fundraising receipts and dues may be subject to income tax. Now, if it's subject to income tax, then you need to file a tax return, and you might have to pay federal and state income tax. So it's important to, if you are independent, to know that if you haven't qualified as a social club, you are required to file a tax return under your tax ID number. Now, if the club operates and uses the association's tax ID number, then the activities of the club need to get reported to the association, and Mohammed has talked about that before, and we need to know the type of income it is to know for the association's tax return, are the items taxable or not taxable. And depending on the type of return that the association files, it might be taxable or it might not be taxable. And certainly if the club is open to members outside of the association, then monies that are received from those people that attend the activities that are not unit owners, that is subject to tax. So there's a lot of record keeping that needs to be done in terms of considering the tax implications. So you need to make sure that when you are part of the association, just to recap, that you have good documentation and you can identify where the money is coming from. Is it coming from members or non-members? And this way, when it gets included in the association's financial statements, we would know exactly how to report that income, if it's taxable or not. And then if you're independent, if you're not, don't have an exemption, then you would have to pay tax. Besides income tax, there's sales tax consideration. Now, clubs are subject to sales tax just like everybody else. And some income might require sales tax to be collected or remitted. So in terms of subject to sales tax like everybody else, if you purchase, if anybody goes to a store and purchases something, they pay sales tax. The club obviously would have to do that. Now, if a club buys items on the internet or either from probably out of state or out of state item, just goes across lines and purchases items, they may not end up paying sales tax at the time of purchase. Well, New Jersey sales tax rules state that if you don't pay sales tax at the time of purchase, you must file a use tax return and pay use tax, which is exactly like sales tax, but you're paying it directly to the state. So a club needs to know those rules, and if they are purchasing items and not paying sales tax, then they would have to file use tax return. Now, if they're independent, they're on their own on doing that, and if they're part of the association, they would need to report these purchases to the association so that the association can properly file any use tax returns. Additionally, some income may require sales tax to be collected. In general, entertainment events is subject to sales tax, and you must charge sales tax on admission fees. Now, if this is something that's done not that frequently, it could potentially fall under the an exclusion that it would not have to be required that sales tax be charged. If it's for a charitable purpose, it could file also under an exclusion that potentially you would not have to pay sales tax on the admissions. There's a lot of rules and regulations with regard to this, so if you are having an event and you are charging admission, then please contact your Wilkin and Gutton Plan advisor so that we can know the exact specifics and then be able to tell you appropriately if you need to pay sales tax or not.
All right. So I think that basically covers our listing for today. So in conclusion, 3 important things. One is be transparent. Make sure that you're letting all your members know what you're doing, when you're doing it, how you're doing it, how much it costs, how much you collected from them, what's the surplus, and what are you doing with the surplus. And also make sure that you have proper segregation of duties. It's not just one person who's controlling everything. You have somebody else looking over them to make sure that they're following the rules and regulations. Cover your bases. Are you properly insured? Are you paying the taxes that you're supposed to pay? Do you have proper records and things like that? So make sure, and do you have the proper licenses and permits for everything that you're doing? So and make sure that you're covered in case there is an issue later on. But I think most importantly and lastly but not least is have fun. That's what it's all about, right?
Well, thank you, Mohammed and Carol. I know we touched on a few questions during the program, but if any of you have any questions or anything else you'd like to add, please feel free to contact us. I'll give you our contact information in a second. But there's just a few resources to go over. WG website, WGCPAs.com. There you can find resources that are geared just for community associations. We have a quarterly newsletter, and we also do quarterly webinars, which are recorded and up on our website. The next resource can be the State of New Jersey Division of Taxation. There you can find a lot of rules on income tax for the State of New Jersey, as well as some of the rules governing the different licenses that you may need for different situations, like we talked about a liquor license and some other gaming licenses, and also sales and use tax publications where you can get a little more information on what is and what isn't subject to sales tax. And lastly, I think this is probably one of the more underused resources is CAI New Jersey. On the website you can find a lot of great resources, some educational seminars and webinars that are done throughout the year, and also the CAI library that has a lot of really great information for board members, not only for club leaders, but for other types of questions and situations, reserve funds, and different roles of the different board members, and all different great publications and resources that are available to you. So here's all of our contact information. Like I said, if anybody has any questions or anything that may have not been covered in the webinar, feel free to contact any of the three of us, and we'd be happy to go over them with you. And just a side note, earlier Mohammed mentioned backgammon, and I have to say Mohammed is a really good backgammon player. So if anybody wants to challenge him to a game of backgammon, feel free to give him a call, and he'll take you up.
I'm up for it.
So thank you very much for joining us, and have a wonderful day.